In Brazil today, 6 in 10 adults are Nubank customers. That's remarkable when you consider this digital bank was founded only a decade ago. Nubank set out to challenge the status quo in Brazil, a banking system dominated by a few large banks notorious for high fees, poor service, and painful account opening processes. Nubank flipped the model. It built a fully digital platform, no branches, and a customer-first approach. The result? Over 100 million customers, with more than 60 million of those joining in just the last 4 years. It's especially popular among younger adults who want an easier, cheaper alternative to legacy banks. The company carved out its niche by initially focusing on credit cards for the lower income cohort, a segment that was neglected by traditional banks. Starting with low limit credit cards, it gradually increases limits, and Nubank has been able to prudently manage risk while growing with the wealth of their customers. Loan losses are actually lower than the industry average across all income levels. Proof that Nubank's tech platform is successfully managing credit risk. Nubank already holds over 15% share of Brazil's credit card market, making it the number 2 player. But growth is far from over. Beyond taking more share in credit cards, Nubank is winning share in personal loans, where it accounts for more than 20% of new lending, and in payroll loans, another huge market that they have just entered. With each new product, it's capturing a greater share of its customers' wallet. The next frontier is Mexico and Colombia, 2 large underbanked markets. Mexico has its challenges. It's still a cash-heavy economy with limited credit data. But Nubank is adapting by partnering with OXXO, the country's largest convenience store chain, to give customers in-person deposit points. Since launching credit cards at the end of 2023, Nubank has already reached nearly 4% market share, closely tracking the early growth trajectory it achieved in Brazil. If it can replicate that success, the growth potential for Nubank in Mexico could be as large as that in Brazil. On top of its growth potential, what also sets Nubank apart is its efficiency and profitability. With no branches, Nubank's operating costs are a fraction of the industry average. This efficiency helps drive returns on equity of nearly 30%, despite having a lot of excess cash and unprofitable overseas operations, putting it amongst the most profitable banks in the world. And despite growing more than 20% per year, Nubank is still priced on a high teens PE multiple. This is a similar valuation to Australia's CBA, which grows at only 3% per annum. Nubank isn't just a fintech story. It's a profitable, scaled digital bank with industry-leading efficiency, strong returns, and a long runway for growth across Latin America and potentially other parts of the world. Nubank is pragmatic value.